Yo, yo, yo. Welcome back to the channel. Uh, oh man. All right, what a day. Wow. We had this big old green pumpy in pre-market, and then we had a big old red dumpy in during market. So well, actually you continued the pump into the middle of the day, and then you just pooped all over yourself. Well, not the middle of the day, 9 a.m. Um yeah, so what's going on? So we're looking at SPY. We're just gonna jump right into it here. We're not gonna do all the small talk. We're not gonna do any preparation. Okay, straight to it. Sorry, I'm trying to get on lower time frames here so that I can show you something. Okay, so this thick red downtrend is from the 430 top back in like whenever that was. You guys remember that, and then it taps here on November 15th. What price is that? 403. I should make my prices bigger. They're kind of small for your YouTube viewing pleasure. Um, and then so you got rejected by it here. You got rejected by it here. It was a tap to support here before rejection here, and then ultimately it was your breakout line up here, and then ultimately your breakdown line back here. So this is a relevant line of support and resistance here that we've been watching for a little bit. And yeah, so you tapped it here, you pulled back briefly in pre-market, and then you just rocketed right through it. I was expecting this to get rejected down a little bit further. That would have been like the more healthy move. There was also another downtrend that we were watching, wasn't there? For this breakout. Yeah, I think it was this one. There you go. And that would have been the more healthy move. That we would have been a little bit more satisfied with that. But instead, you got this weak, no volume pump. Everybody on Twitter was, when I was saying like, hey, relatively bearish while it was pumping, everybody was like, haha, Dave's bearish. um, and then obviously it jumped off of of an absolute cliff. And on Twitter, we scalped this thing. I believe that my level when it broke below 393.50 again. I'm pretty sure that was the level. You can go back and look. I said I was bearish below there. We broke below there, and then basically I walked through step by step on Twitter. All the way down to 387.80, and that 387.80 level was based on this Fibonacci retracement here, the 0.5, 387.84 here, but it was 387.80 that we were calling for, and now you are getting rejected down below it in after hours, which is not a good sign because okay, so what am I expecting? So there are a few scenarios, okay? So we have to draw our Fibonacci here, okay? Wait. No. Here. It was a 382 Fibonacci. I mean, look, you're breaking down back below this trend. That tells me that it's really likely, actually, that you're going to get sent down to this, and you're in no man's land down here at 386. I mean, you have horizontal support here, but this isn't really important. You don't have a support trend. That was the problem. I said during the middle of the day that there was no there was no support trend for price up here. So once you broke through the 393.50, there was nothing left. There's what I'm saying is there was no nothing to bounce off of trend wise, right? So this is I'm trying to be educational here for a moment. There's no I mean, I'm pretty good at finding trend lines. There was no trend line. There's no trend line the whole time. Basically what I'm saying on on a higher time frame. So I was like, yeah, I literally tweeted. I was like, there's no interesting trend line. So it seems like the price is just gonna fall. And that's exactly what happened. So and you see that happen a lot whenever you have this really steep uptrend. Once you break through it, it's kind of like, okay, yeah, well, we don't have anything left, so we have to go back and retest lows, which is fine. All right, what's going to happen? Okay, so scenario one that I'd say is the most likely is, and just to reiterate that point, I don't see any, there's no correlation of like support trends to be had here. So I'm gonna say that the first zone that I'm watching for is this 0.5, the 386.15. I don't know what time Powell talks tomorrow or whatever. I don't really care about that. I swung puts because we were below this this downtrend. Not a huge position. I'm willing to lose it type thing. But I'm definitely seeing 386.15. Again, there's no support trend, so what's going to happen is you're going to chop around here for a minute, but you're probably going to get rejected down. So this is actually my most likely, I would say this is probably my most likely scenario at this point, that you see 383-ish by Thursday or Friday, Thursday late, early Friday. That's my most likely. By the way, this is not financial advice. I shouldn't have to say that, but like, options contracts are extremely risky, okay? I was seeing the contracts go from like today, just for an example, I remember specifically the contract was up like 250%, and then it had a big green candle come, and like within like 30 seconds, it was only up 120% or something, okay? You can lose all of your money trading options. So don't be an idiot, okay? Seriously, come on. Don't do what a guy on YouTube says to do. Don't do what I say on Twitter. I'm really dumb. So anyway, yeah, so this really does look like it wants to distribute back down here. And then from here, it's a little bit harder to tell. I mean, you're going to want to see like some reaccumulative action here. And I don't mind the idea of like local higher highs here. I do think that ultimately the goal here is to redistribute, and it makes a lot of sense to redistribute and frustrate bears, because bears are definitely on the macro scale the most horny. Okay, the bears are kind of, oh, we're going sub 300, you know, like on a more macro scale. With short term, bulls definitely were ahead of themselves today. And you saw it play out, right? You just don't hop on rocket ships and just ride to the moon. That's just not how it works, okay? Institutions have money to make playing both sides of the market, and that's what they're going to do. So anyway, so it probably looks something like this, okay? This is probably my most likely scenario, okay? So late into January here, you'll see like 402 here. That's my most likely scenario, okay? Let's just make that our target zone for reference on the channel so that I can remember going forward to mention that whenever we make other videos. And obviously, you know, if you break below, right? If you break below here, then that's not what I'm thinking anymore, okay? So if you break the green uptrend that you have that's established back here in October, and you have a bunch of touch points here before this rally in December and January, if you break below this, I'm not still thinking that it's going to be a big bull run, okay? So like, you really want to be watching price when it gets down here to this like 383 region. All right, what's the alternative? So another alternative that we have, generally speaking, okay, so short term, like going into tomorrow and the following days, unless I see some sort of shift, I'm most likely bearish. And then later in the week and going into next week, I'm relatively bullish, and probably mostly bullish going into the end of the month, okay? Just based on the way that the trends are setting up here and the way that I'm seeing timelines happen. So what's another possibility? So you have this resistance trend up here now that has been established. I could see a scenario where this behaves as a bear trap short term, okay? So you get bears trapped underneath here. Boom. You squeeze them up here to 391.44, 391.50. I bet that's like a 707. Close. Let's see. Okay. I mean, or you could have it like it really likes the 0.5 in the 707. Okay. SPY, that's like the algo right now. Okay. SPY is really into the 0.5 and the 707 fibs. And we like to correlate that with a trend line. So see here late in the day on Tuesday, I could certainly see a scenario where bears get squeezed here. Okay. And then this would be a redistribution in the short term into what I think could play out as a falling wedge, okay? Which is a bearish reversal pattern. And then if that were to happen, then that would, I mean, a bullish reversal pattern, I'm sorry. That is a pattern that bears are seeming to be in control, and then you reverse and have upside for bulls, okay? So I could see that sort of scenario playing out here, and obviously this isn't going to be a straight line like this, okay? It's going to be like, you know, you can have like this sort of stuff occurring. It probably won't go left like it does for a second, right? Like right here, it looks like. But you get what I'm saying. Anyway, like this is the sort of correlation that you're looking for, though, right? There's a lot of liquidity whenever you see this sort of thing. And also, this is just a very frustrating play here. If you continue to like wedge yourself into this this price territory, right? So maybe it's something like this, and then you retrace down. Everybody is getting frustrated, and nobody knows what options to buy, and they're getting faded to death, and then you have a big breakdown. Okay, so that's kind of like what I'm looking for. Now, at any point, so remember what I said earlier, right? I'm bullish, like pretty much going into the end of the month here. It's kind of hard to tell. Oh, that would be, I don't think it'll be that explosive. So yeah, like maybe something like this, whatever. You get what I'm saying. Okay. All right. I'm pretty much bullish going into the end of January. Definitely think that $400 is on the table, $398 to $400. And then I do still think on a macro basis that the likelihood, right, over the course of the next 3 or 4 months, the likelihood is that after you go up into your target region here, you retest the macro bear trend, you consolidate here for a little bit, and then I do think that ultimately the likelihood is that you get rejected down here, okay? I do think that that is ultimately the likelihood that is going into February, March, into June-ish at this stage. The timeline is a little bit more difficult. I know that I'm going to be definitely looking for it to retest this midline down here at some point if this redistribution gets confirmed here. So what that would look like is maybe you find support here, you get rejected down, boom, and then boom. Okay, so that would be new lows. So this is the most likely scenario in the short term, in my opinion, going into the summer. But I also can see a bullish scenario, which is that this actually plays out as an accumulation on the macro dating back all the way to April of 2022, and that instead of having this bearish rejection, maybe you come back, maybe you find support here and you climb up in this way. You have an explosive move back into the 430 to 450 range, or you could consolidate down here and get a double bottomy sort of action and then have this sort of bigger move. Okay, so those are so the point of that. It could go up or it could go down. Yes, we're consolidating into we're going into very meaningful bull and bear trends. Like you're seeing the possibility of consolidation here. What I'm referring to specifically is, let me get rid of all this. What I'm referring to is very specifically these two trend lines, okay? All right? This is called a symmetrical triangle, okay? All right. Is Jasmine home? My fiance's home. This is a symmetrical triangle. All right. We're going to learn about symmetrical triangles. Let me shut the door right quick, because my kids are going to come over here and yell at me. Here. Okay, I'll be right back. All right. A symmetrical triangle is not a bullish or bearish pattern. Okay. A symmetrical triangle is a 50-50 pattern, but the reason that it's relevant is because it can give you an idea of a timeline as to when you could have a more explosive move, right? So I'm not here to try and predict the future and tell you that it's definitely going to go up or it's definitely going to go down. I can contextualize, like through context, I can tell you that based on the volume and based on this overall retracement in this more macro zone, I can say, based on my experience, that historically speaking, a retracement of this magnitude, a 382, doesn't really do the job. You would be more likely to see at least a 0.5 retracement, right? I can say that, but I can't know for certain that that is a scenario that'll play out. And even if it does, I can't tell you with 100% certainty that it's going to happen before you break up here, right? So maybe you would break up here. This is also possible, okay? You break up here to 440 or something by March, right? You break the macro bear trend, and then you still end up here, okay? You still end up at 324, 325 by, what's this? End of 2023, okay? That's certainly still a possibility, right? So, like, short term, if I'm looking to play this, this down to 324.50, for example, and this is going to happen, I do not want to be sitting in puts. That's horrid, okay? This is it's like a nightmare, right? SPY is running 12%. You're holding on to puts. It's very painful, okay? Like, I know 12% doesn't sound like a lot, but when it comes to SPY, like 12% is a big deal, right? You're playing Apple puts, you're playing whatever. 12% is a big move for SPY. So I'm saying that to say that, like, I wouldn't, in the shorter term, it's really important to understand, like, when a big move could happen, right? And so here, if my bias is bearish, I will say though, like, this little zone right here does look bullish overall. I mean, you're hanging really low on this trend, nice and steady on this trend. You don't really have a lot of bearish resistance anymore. So, like, as of now, just because of the more macro thing, I'm like, hey, I'm sitting in longer dated puts, whatever, and I'm loading. But once you break here, I'm like, okay, I'm gonna ride the trend, dude. I'm not like, okay, like, that thesis is out. Now let's find out where the next opportunity lies or whatever. And in this breakout scenario, the opportunity would be on, short, whatever term basis, to be playing the long side more frequently than the short side until the trend is broken, right? That's it. Trends are your friends. That's it, right? And even here, I mean, if you've been following the channel for a while, right, that we were saying, hey, mostly when you're below the midline, it's very bearish. We know that the price is gonna spike down really hard a lot of times. And then once we developed uptrends, right, we were willing to say, okay, look, we're gonna ride the uptrend. And then once we broke the midline, we were like, hey, we're more bullish. We're more likely to test the top of the range. And we did that same thing back here. Once we started to see this reversal here and we broke here, and especially when we retested the midline, we're like, hey, dude, we're probably going all the way up. And that's exactly what we did, right? So I will say also that if we do retest the macro bear trend, which I'm expecting, that is technically a change of behavior and would be the second change of behavior, because As we've mentioned before, let me change the midline to a different color so that it's not so noticeable. As we talked about before, for the first time, you broke back above the midline without testing this green support trend, right? Or really even this support range, right? No matter how you draw it, you never tested it again, right? If you wanted to draw it based on these two touch points, right? This is like the most like bullish version, and this is like a spring or something, right? You never retested it, which is a change in behavior, something that is shifted, and then you broke back above the midline. That never occurred. So this would be a second change of behavior. Okay, bulls are building a case here, technically. Like bulls are building a case here, technically, to see a potential break of the macro bear trend. And that doesn't mean that you're going to see new all-time highs tomorrow, whenever that happens or whatever. But what it does mean is that you have to be paying attention to the price action, paying attention to when these trends are broken or held to support or whatever, because that shift in behavior, if you test what I was saying was, if you test this bear trend again for a second time before you break below the midline, that is also a change in behavior that has not occurred yet at this scale, right? So it's definitely something to look out for, because two changes in behavior that are favoring bulls is a really like short, medium term bullish outcome. Okay. So I've talked enough. I do have to go to the gym. We talked about a lot of stuff or whatever. Hopefully some of it was like, interesting to you, and I just didn't like bore you to death, and maybe you learned something, or at least like maybe something caught your eye, like that you didn't notice before, something like that. But overall, thank you for watching. I'm gonna go get dressed and stuff and go to the gym. I've been sitting inside all day. I was tweeting a lot today. I usually don't tweet that much, so but it was fun. It was a good time. I noticed an opportunity there, and I just kind of hopped on it, and I wanted to share my thoughts as it was happening. So that was a good time. So anyway, let me look at this daily candle right quick. Ooh, yeah. This is not it's not a bullish daily candle. It's not. This certainly would suggest that you're gonna continue to have a pullback. But nothing is 100%. Okay, so anyway, yeah, that'll be it. Have a good day. Oi, oi, oi. I'm not gonna sing. I'm kind of hungry, dude. And it's leg day. I'm gonna go eat some rice, a lot of rice, and then I'm gonna go to the gym. All right, bye.